Hi, my name is Amanda Fortner, and this is my financial analysis project. For this project, I will be analyzing two industries, which are the oil and gas industry and the advertising industry. Within each industry, I will be analyzing 5 companies over a 5-year period. After analyzing the 5 companies of the two industries, I will choose the best company and then the best industry overall. The 5 companies that I will be analyzing for the oil and gas industry are Hornbeck, which is this, Secor, Tidewater, Gulfmark, and Halliburton. The first company I analyzed was Hornbeck. Just a little bit about Hornbeck. Hornbeck is a marine service provider that provides logistics service across the U.S. and Puerto Rico. When first looking at Hornbeck, the first ratio I looked at was the return on equity ratio. The reason why I chose this ratio is because it's the most important ratio for a company, and for this presentation, I'll be using this ratio a lot. The ROE lets investors know how much profit a company earns. It measures performance and how capable the company is at generating cash flows. The higher the return on equity, the greater the amount is earned by the owner or the shareholders. In 2008, as you can see, Hornbeck started off with a ratio of 17.83. And like all other oil and gas companies, Hornbeck drastically dropped in 2008 after the oil spill. Since the ratio dropped, this shows that the shareholders aren't getting that much in return. And that is not a good sign, because we always want to keep our shareholders happy because they control the market. Overall, the ROE is low, and Hornbeck has a low total asset turnover, which is a sign of poor management. And this is some information I got from Bloomberg. Right here, it shows the net operating profit after taxes. This is what the company has, which is $65 million. The capital charge is what the market expects for the company to make, which is $243 million. So the EVA is a negative $178 million. So the company did not meet up to its expectations. Secor. Secor operates, owns, invests in, and markets equipment primarily in offshore oil and gas and shipping industries worldwide. Secor ROE ratio in 2008 was a 12.3 and ending at a 3.7 ratio in 2012. The total asset turnover ratio was extremely low over the 5 years, causing the ROE to drop. Since the total asset turnover is low, that shows signs of poor management and that managers aren't utilizing their assets wisely. Their total debt ratios were extremely high. That is a good thing, but not when a company is taking on more than they can handle. And this is the information I also got from Bloomberg for Secor. And NOPAT is $77 million. Their capital charge is $195 million. And their EVA is negative 118, which means they didn't meet up to their criteria that the market expects them to meet. Tidewater. Tidewater provides services in support of offshore exploration, field development, and production. Since 2008, Tidewater's ROE continued to decline at a 3.47 ratio in 2012. Their tax burden and interest burden were both doing well. The economic value added was not so good. Throughout the 5 years, the EVA declined constantly, leaving the number as a negative, which means that the company didn't meet the criteria of the market. So the EVA for this company is negative $602 million, which is a whole lot and is not really good. Alright, Gulfmark. Gulfmark provides offshore marine support and transportation services to companies involved in offshore exploration and production of oil and natural gas. Gulfmark didn't do too well in the ROE in the past 5 years. Starting off at a ratio of 24 and dropping in the negatives in 2010, I believe that the oil spill played a role in the ROE dropping. This company's ROE was driven by the tax burden. The EVA remained in the negatives for this company. Also, just as the other companies in the industries did, because of the oil spill, it caused a lot of things going on, and it dropped the numbers down. All right. Halliburton. Halliburton is one of the world's largest providers of products and services to the energy industry. Their ROE ratio was at a constant trend, topping each of the four companies. Halliburton's ROE was driven by interest. Looks like their managers knows exactly what to do, where to put their money. Halliburton had the highest total asset turnover, which means they had great management and assets were not wasted. They are the most profitable company, and they are growing more and more solvent every day. And for this company, their economic value added is still in the negatives, but they showed really good progress in their total asset turnover and their ROE. Now for the advertising industry. So for the advertising industry, I will be analyzing Clear Channel Outdoors, Lamar Advertising Company, CBS, Velasquez. I won't be doing Charter because there wasn't enough information on Bloomberg for the 5 years. And that's it. Alright, Lamar. Lamar operates as an outdoor advertising company. We see Lamar advertising everywhere from billboards to logo signs to exterior and interior public transportation. Seeing all Lamar advertising good work, you would expect for the ROE and the total asset turnover to be good, but that is not always the case. Lamar Advertising's ROE ratio was really bad in 2009 and 2010. Their ROE ratio was negative. Even though they paid less taxes and they had the worst total asset turnover all 5 years, which shows poor management. The EVA was negative, which means they didn't meet the criteria of the market. Clear Channel. Clear Channel is also an outdoor advertising company. Clear Channel is the least profitable company overall. The ROE was only positive in 2011. All the other numbers from 2008 to 2010 remained negative, and it only went up in 2011. The amount is like 5, and it went back to negatives in 2012. The ROE was driven by the tax burden. Even though Clear Channel paid a lot of taxes, their tax burden was still the highest. And as you can see, their EVA is negative also at negative 95 million. So they didn't meet their expectations also. CBS. CBS operates as a mass media company in the United States. CBS has a negative ROE, and it continues to increase for the next 4 years. CBS is the most solvent company in the industry, meaning they can pay their debts on time. In 2010 and 2011, CBS had a high interest burden. With a high interest burden, the company does not have to pay a lot in taxes. Their EVA is positive, which means they were able to meet the criteria and the expectations of the market. So their NOPAT was $2,241,000,000. Their capital charge, this is what the market expecting to make, was $2,081,000,000, and the economic value added was $159 million. Velasquez. Velasquez provide media solutions primarily in the U.S. and Europe.
Attention please. The library will close in 20 minutes. To repeat, the library will close in 20 minutes. You have 15 minutes to check out books and to log off all computers in all departments.